Good morning. The date 9/28/2014 at 10:15 a.m. Pacific Standard Time. We have a daily chart on the S&P 500, and I'm just going to talk a little bit about the simple daily moving averages. The 20-day simple moving average on the S&P is 1995. The 10-day simple moving average, which is this blue line up here, that's the 10-day, that's at 1993. So we're below both of those, and we're fooling around with the 40-day moving average, happens to be at 1977. This white line right here is going to be the 50-day simple moving average. That is 1955.647. What I am going to talk about in the last high, this is called a blow-off high, we clearly stated that we were going to go down. We also clearly stated that the price volatility action will be substantially higher than other periods of time. The S&P 500 has been a tremendous bull run. Everything has to have pullbacks once again. So when we had this gap down, we started 1 day, 2, 3, 4, and here's the 5th day. Now, everybody's going to be watching 1955 on this S&P 500. Another thing that I'm just going to point out is a couple of technical things that the rest of the world looks at. That's going to be the moving average convergence divergence, the MACD, and it's been declining. It was 9.3, 8.3, 6.5, 6.2, 3.4 on the 25th, and once again that reading is 2.4. And that means that the up movement and the daily volatility, see, here's what we're going to say. This particular red bar at 925, we had opened at 1997. The high was the 1997, and then the low of this bar, this daily bar, was down here on an intraday level at 1965, and that was on the 25th. We managed to close on 926 with that calculation at 1966 was that low, and then the close was a pop off of the bottom that day at 1982 on the S&P. So we clearly know that this is going to be the upward resistance on the daily chart of the S&P. It's closely getting very close to getting into what we would call in the retail public world is a daily sell signal. So we know where the 10, we know where the 20 is, we know within the overall pattern, and that the price action has been more greater selling than buying. The bull is still going to fight the process. However, the correction that we've been talking about is not there. Behind me, I have a weekly chart here on the S&P 500, and you can clearly see when we broke out for 4 weeks, that started on 8/3. Well, I'm sorry, August is over. They made the high here at they opened it at 1991 and 824, and the high was 1990 then. So as we go through this major resistance price channel, we're going to calculate that this movement here started at 2009 and it went down to 1965. That line that you see, that blue line, that is your 10-week moving average. So we want to make sure that everybody is understanding where that 10-week moving average is on a weekly level. And the bulls are going to have, and that 10-week is 1976. We undercut it. That red line, which is ascending in value, is tremendously still bullish at 1960 on a 20-week simple moving average in the S&P. And when we take a look at what market volatility is, that's the price action volatility is going to be picking up for both the bull and the bear at the same time. So when we start out tomorrow, Monday morning, we're going to be closing out this September trade. And as long as these things dip down and test and they hold, that means that those buyers are stepping in and buying at the 10 week and the 20 week. And we were down there at 1960. And we told everyone here from 2019 points that we were going to go down. And we did. We went down to 1965 on that reversal. And here's another thing. Right here on stockmarketfunding.com, you can see right here where we did some analysis and we had updated the S&P, the Dow, but we're coming back and we're doing it now because it's very important that even though that we did it here in the updates, but it's very important for everybody with these updates and videos here is what Monday is going to look like. And here are some prior stuff that we have done on stockmarketfunding.com. All the live videos, all the live setups, all the live entries and exits, they're right there at your fingertips through our market maker trading management. You click on the free trial, all you got to know is just get started and read the content. But better yet, you go back over here, you're going to find everything that was in here and everything that we did. So basically what I am going to say, if you're looking for trading capital, you go to open an account tab. Once you open this account, listen to the video, click here, get started here, understand the kind of capital that we're going to give you on your trading account, and it's very self-explanatory. Now, back to the S&P on these 10-week and the 20-week. Let me just tell you something. When the 10-week was ascending right here, that blue line, and every time we hit it down here, we did overcome with the gap, and that was on that was a long time ago. That was on 525 at 1902. And we rallied up. We called for a good sized pullback. And we were very correct at 1991 on the high. But let me just tell everybody something. The low was 1965. And so therefore, that was on 720. 1976 was the open, the high was 1991. 1965.77. Right here. And we're at about that level on this intraday low. And this is where they got rocked. 1984, that bar went down to 1916. And we were very clear about that on the SMF trading site. Nobody can deny that we called for the reversals up here at a 4-week consolidation. I'm sorry, we did it live. Not only did we do it live, when we hit that 20-week moving average there on the low at 1904, within this overall correction, we rocked and rolled to the high on their very narrow range volume. And this is the 4-week pattern. So we still want everyone to know that we got more room within the volatility to go lower. And it's been a long time since you can get both the bull volatility and what? The bear volatility. So the correction that happened down here some time ago, before this thing just continued to rock and roll, this is where that bottom wick was in price. And if we just want to go that way right here, that's that longer diagonal trend line. And then if we want to go from the very same point from the body of it, of the weekly, we can clearly see that that was also the topping process, and that the S&P could not perform, and that the S&P would have to have a pullback, and then people would come in and buy it. Now, if we come from the very same point, at that point, and we're going to come right about, it's got to match just perfectly. We're going to come right about there. And that 4-week got below that diagonal trend line on heavier selling volume, and then we rallied up. Now, let's just establish one thing. Let's establish that actual date. I am happy to tell you that bull runs are going to have price volatility. And you need to stay tuned. I'm going to show you right now. That went open at 1782 right here. That's what that bar was, 1782 was the open, and the high was 1798, and the low for that day was 1737. And that was on February 2nd. Okay, now we've got all of these various different trend lines drawn, and I'm just showing our traders what to expect as far as me taking this very same point and then rocking that point, because you got to see it, and that's perfect right there. And we are on the outside. 10, 20 week, what I am saying, earnings are going to be coming out on a public corporation. Earnings are going to be coming out in the middle of October. You've got ISIS. You've got world banks that are in trouble. Europe hasn't really come back on board yet, and that the USA right now is in charge. And they're pulling what I said 2 years ago. Their goal was to pull in as much of foreign capital and fund managers to get into our markets and start making their trades. And the thing about it is, this is just a warning to you. Now, let me just make this clear to our other guys around the world. This line right here, I'm going to go down to hit this line right here. And I'm going to calculate that this date was on 5/18. In May, you're supposed to sell and go away. No, they didn't. They rocked it up 3 weeks. We'll draw another trend line right there. We're going to draw another one there. And we're sitting on this major resistance level over here as our current support level. And if the 10 and the 20 keep contracting and start to roll over, then we know that the S&P has a long ways to come down. I just want everybody to know one thing. This white line is that S&P. And that level on the S&P, now, that was on 9/21. And the value of that diagonal 50-day simple moving average, we're going to tell you what it is. It's at 1707. So here, let me just show everybody that this low was 1904 right here. And this high right here was 1964. That's why the 1965 at these weekly moving averages are coming into play. Let's just understand one thing, my friends. And all of you people, you need to get back into these markets. You let StockMarketFunding.com fund your trading account. You heard what I said. You'll have money to trade this bull market that is currently in another correction. So we're going to call this one here. We called it. It's on the website. Go back and look. From this point right there. It was a good pullback. Now, if I come off of here, which I'm doing, you're going to find out one thing. On a weekly level, part of that distribution bar is on the other side of this. So that's going to be very important as we move forward on the S&P 500. And it's a major update. And I'll tell you why it's a major update. Because you got a resistance level up here. You got a 4-week pattern. And you got the outside bar on Friday, counting for the weekly, coming down and testing those moving averages. The reason why I'm trying to show this major top and resistance, it's a 4-week resistance, but you had heavier selling volume than what we had here. But they both are very common at the resistance levels and the pullback levels in these weekly bars right now. Hey, thank you, traders, all my friends around the world. You're welcome to come here now.